Okay, so in this video I wanted to cover Delaware franchise tax reports or annual reports and how they differ between the Delaware LLC and the Delaware Corporation. And what we're going to highlight here is why Delaware is one of the most popular just for administrative ease, because when you're an LLC, you basically don't have to provide anything. So Delaware LLC, certainly in my opinion, is probably one of the easiest annual filing renewal requirements that you're going to find throughout the entire country. Delaware doesn't have a quote annual report for LLCs, whereas most states do. And so most states, when you file the annual report to keep your entity active, to pay the annual filing fee, you have to provide some information, right? So some states require disclosure of assets or liabilities that you might have within the state, or you might have to update a member list, right? So you have to provide who are the members, what are their addresses. Perhaps you also have to file, where your principal office address is. Delaware doesn't ask for any of this for an LLC. So when you go to file your annual report for an LLC, all you really do is make a $300 filing fee payment to keep the entity active. They don't ask for information on the owners, the activities, income, expenses, assets, liabilities, none of that. That's really all Delaware requires to keep the entity open, is just this $300 filing fee. So let's look at an example here. We have John and Jack create this LLC on September 30th, 2020. The first annual report due is going to be June 1st of the following year. Right, so June 1st is the due date for all Delaware LLCs for the annual report. So on during May 2021, John goes to the Division of Corp website. He enters the 7-digit business ID that was assigned to his LLC. And after you enter the business ID, pulls up the annual report, the name of the company, and the amount of tax or payment that's due for that year. Right. So the total due is going to be $300. It's a fixed $300. Again, this doesn't go up or down depending on the size of the entity or the activities. It's always just $300 for an LLC. So John indicates he wants to pay the $300. He can enter his credit card details and hits the submit button, and that's it. That really is it. It's incredibly simple to keep a Delaware LLC active. In contrast to some other states and even Delaware Corps, right? So what we're going to look at here, just for some contrast, is how the Delaware Corporation differs a bit. Now, Delaware corporate filings, in my opinion, are still pretty easy, but they require much more information than a Delaware LLC. So we have Adam and Brian here, form a Delaware Corp, same date, September 30th, 2020. Now, the franchise tax returns for corporate entities are due March 1st following the close of each year, right? So the first one due for this entity will be March 1, 2021. So they decide in January they're going to go ahead and file this and pay the fees. They visit the website. Again, the corporate entity has a 7-digit business entity file number to look up the entity, and then the franchise tax return is going to be pulled up. It's going to have a number of open fields that you have to enter, and these are some of them, right? So the first one at the top will be the EIN. So Delaware wants to have the EIN for the company. If you don't have one at the time, you don't have to enter it. You can leave it blank to get it submitted, but if you do have an EIN, you should be entering it. Then they're going to ask that you update details on each class of shares that's authorized and outstanding under the charter and how many shares are out there, right? So the franchise tax return will have already pre-populated how many shares were authorized under your charter, and then you have to enter in how many have been issued and outstanding, okay? Then they're going to calculate the franchise tax fee. So in Delaware, you have two options. You can use the authorized shares method or the assumed par value method. Authorized shares basically looks at how many shares are authorized, and depending on how many you have out there, that's how they compute the fee. And the calculation under this method can get quite high, right? So if you have, let's say, 10 million shares authorized and outstanding, you could have a franchise tax bill of 70 or 80 grand. All right, gets up there. The alternative is the assumed par value method. So this is what a lot of companies use that are small, but also have a lot of shares that are authorized. And what this does is you put in whatever the gross asset value is of the company at the end of the year, and then it kind of lowers the franchise tax bill based on the net worth of the entity. So under the authorized shares method, if you have 10 million outstanding, you get a large franchise tax bill. If you have the same 10,000 authorized shares, but you're calculating under the assumed par value method and you have a lower asset value for the company, you'll get a much more reasonable franchise tax bill. It might be $4 or $5 or $600. A lot better than 80,000. So then they'll also ask corporation's principal place of business, update that information. And then they want to know the names, titles, and addresses for all the officers and the board of directors. So again, unlike the LLC, where you don't have to provide any information on the members or the managers, for corporate entities, they want to know who the managers are, right? Who are those corporate officers, the CEO, CFO, COO, and so on, and then who are the board members, right? So if you've got a 6-person board, all 6 individuals get listed, whether it's 2, 3, 6, 12, whatever the board requirements are under your charter. So again, not too cumbersome to file corporate franchise tax returns, but a little more complicated than just simply paying $300 and hitting the submit button. So yeah, that's why Delaware LLCs are, one reason why they are very popular is the ease of just renewing them every year. And you know what you're paying every year, $300 every single year, no issues. With the franchise tax returns, it's going to be a combination of how many shares you have out there, what if you use the par value method, what's the asset value of the company. So a little more complicated to figure out what your annual fee is, but still not too bad. Okay, so that covers it for this video. If you have any questions, please leave me a comment below, and I look forward to seeing you again on the next video. Thank you.